Alright, so welcome to the recorded tutorial session for consolidation. So as you can see in my screen, I have uh, the statement of comprehensive income and financial position of Strong and Courage Company. Okay, so this is a sample problem for consolidation that you can use as a guide, okay, when you wish to prepare consolidated statements. Okay. Uh, so with this information, you can see here we have the statement of comprehensive income of both Strong and Courage Company, and also statement of financial position. So you will be able to see, or you're able to see all the necessary information. Okay. So in this sample problem, Strong is the parent company, which is Strong Company is the one who purchased the subsidiary, which is in this case Courage Company. And we have this additional information here that Strong Company purchased all the outstanding share capital of Courage on 1st January 2022 for 352,000 kina. And that will be equivalent to all the equity section of Courage, which composed of 168,000 kina for share capital, general reserves for 40,000 kina, and retained earnings for 56,000 kina. With regards to that, there will be additional information provided to us. So in this case, we have land and plant, which has carrying amount and fair value. Okay, so as you can see here, land fair value of 144, and then carrying amount of 144, and then fair value of 192. With plant, we have 240, and the fair value is 264. So it says here all valuation adjustments to fixed assets are made on consolidation. And then we have the second information, additional information here. We have 64,000 kina, which is a final dividend and unpaid as of 31st December 2023. Tax rate is 30%. And then there was an intra-group transaction between Courage and Strong Company. So Courage Company sold an inventory for 240,000 kina. The value of that one, or the cost of that one under Courage, is 1,600 kina. So all these inventories are on hand by the end of the period. Okay, so we are required to prepare elimination entries, consolidated worksheet, and consolidated financial statements. Okay, so just for clarity, this work is a simplified discussion, which, as you can see, there are some items which are missing here, like expenses. So the main point of this discussion is only to show how consolidation works. Okay, and those other factors or other accounting tasks are not discussed here. So just a disclosure, as you may have some questions on this presentation with regards to why the expenses are not presented and these things. So again, the main point is only to show consolidation. Alright, so let's start off and in the elimination entry. So our first focus will be before you calculate goodwill. So as you can see here, it's nil. You need to adjust the books. Okay, and it is common that the consolidation, as you can see here, the revaluation is done on consolidation, but there are chances that the the adjustment of fixed asset can be done before consolidation. So with regards to that, the journal entries may be the same, but the accounting treatment will not be the same. Okay, so that one I'll have a separate discussion on how it will affect accounting records when the adjustments is made before consolidation. Okay, so in this case, our illustration will be focusing on the adjustments to be made during the consolidation. All right. So before before you perform elimination entries on this situation, you have to adjust this first. Okay. Afterwards, you can calculate goodwill and do elimination entries and eliminate any intra-group transactions. So let's start here. So the first one, we have land. Land uh, from 144,000 kina, it becomes 192. So the difference is 48,000, as you can see here. That will be the adjustment for land. Okay, so let's start off our elimination entries. Okay, so the first elimination entry that we have is for land, which we need to revalue first. Okay, for land we have the original cost, or the carrying amount, is 144,000, but the revalued amount is 192,000 kina. So the difference 48,000. And for the tax, we have 30% of that 48,000. We have deferred tax liability, 14,400. And of course, the difference to make it balance, 33,600 will be charged to revaluation surplus. For the next one, accumulated depreciation debit and credit plan. This is done before you do the revaluation for plant. We call this net method, okay, in revaluation recognition. Okay, so the difference 120,000 kina. And then related to that, so we have to revalue plant. Okay, so debit plant, credit that plant will have carrying amount now is 240,000. Okay, and the revalued amount is 264,000. So which means the difference 24,000 kina. So that will be charged to plant. 30% of that we have 7,200, which will be charged to deferred tax liability, and the remaining will be, or the difference will be, charged to revaluation surplus. Now this 16,800 and 33,600 will be used in calculating goodwill. Okay, as you can see on the next presentation. Okay, so but before that, we go on to do the calculation of goodwill. Okay, so in the previous case or previous sheet, you have 352,000 kina for your investment, and then you have originally share capital 168,000 kina, general reserves 40,000 kina, and then retained earnings 56,000 kina. Okay, so all of those are here. Okay, sorry about that. Okay, 168, 40,000, and 56. Now remember, revaluation surplus are taken from the previous entries here. 168 plus 33,600. Okay. So it's in the it's in the formula itself. All right. So get the fair value of identifiable net asset, share capital, retained general reserves, retained earnings, and revaluation surplus. We have this 314,400 kina. Acquisition cost was given in the problem a while ago, or the information a while ago. So we have goodwill, the difference between these two. If acquisition cost is greater than fair value of identifiable net asset, then that will result to goodwill. Otherwise, that will result to gain on bargain purchase. So to journalize this, debit share capital, general reserves, retained earnings, revaluation surplus, and goodwill. So as per our calculation a while ago. And then eliminate the investment in carriage company, 352,000 kina. And also, as you have noticed, I have numbered the entries here. Okay, so the purpose of that is only to guide us later on consolidation worksheet. Okay, number 5 and 6, if you go back to the information, we have to eliminate this final dividend. Okay, so debit dividend payable and credit dividend receivable. Okay, 64,000 kina, and then debit dividend income and dividend paid. All this, as you can see, will be in the worksheet. Okay, this 64,000 kina here and here for strong company, and this one is for courage. We have dividend payable on courage and dividend receivable from on strong group, strong company. And the last set of our elimination is elimination of intra-group transaction. Okay, so this. So when you sold inventory within the group, so you have to eliminate that intra-group sale, debit sale, and then credit cost of sale, 2,400 kina here, and then credit that one. To have that unrealized profit share, you have 2,400 kina here less 1,600 kina. So where we got this? This is the cost charged by Courage. That is the cost of the inventory as per Courage inventory. 2,400 kina is the sale or the amount that being charged to Strong Company by Courage Company. Now, in this case, it says that all inventory remains, so which means all this should be here. Okay, but in case, for example, if only 30% remains in the group, okay, so you have to get that, 0.3. So instead of 800 kina here, it should be 240,000 if only 30% remains. Okay. Then the tax effect, okay, because you have unrealized profit here, that will reduce the income tax expense. So 800,000 kina, 800 kina here, multiplied by tax rate of 30%, you have 240,000 kina. Okay, so debit deferred tax asset, and then credit income tax expense. Now, if you go through this, you can see again the numbers that I've placed here. That's only for us to be guided on posting. Okay, so in with regards to consolidation worksheet, so this what we need to do is you have to have a two columns here for the parent and subsidiary. Okay, so one for parent and one for subsidiary, right? And then two columns for elimination entries and one for consolidated amounts. Okay, so if you have typed all those amounts from your two companies here, that will be fine. So you have to do that here. All right. Okay. So in your elimination entries, okay, you have to post all the eliminations that you have done here and put it here. And you can see I had put uh, red font on this numbering that I had made on the consolidation elimination entry a while ago. So for example, uh, so the first elimination is for land here, okay, or for first adjustment or revaluation elimination entry. So we have 48,000 here, as you can see here, right? Then deferred tax liability, which is here, right? So you can see 1 and 3. Okay, the reason again, you have here the first elimination entry here, revaluation surplus here, and another revaluation surplus on this side. Okay, and same with deferred tax liability. Sorry, coming back to that. Sorry, uh, revaluation surplus. It will still be the same. Okay, you have added those two. Okay, So important thing is keeping track of your posting here. So I would suggest if you're doing the consolidation worksheet, do it one at a time. Okay, so oh, post this one, post the next one. All right. Okay, so that's pretty straightforward, as you can see here. Okay, you just post, get it here, and then post. All right. Let's go to the technicalities of consolidated worksheet. All right. So in this case, uh, if you have a sale here, okay, for strong and courage, and you have debited an amount here. Okay. So in consolidation, the normal balance or normal side will apply here. Okay. So for example, as we know, sale has a normal side or balance of credit. Okay. So you have this credit here. Okay. If you put debit, then it will reduce the amount. So as you can see in the formula, okay, you have added this 2, added this 2, and then you can see D8, okay, D8, we deducted it, okay, and then F8, we added, okay, so which means that rules of debit and credit, normal balance will play a big part here, okay. All right, so example here, uh, so we have cost of goods sold. If you added these two, you can say it's negative. Okay, that's still fine because we are under the statement of comprehensive income. So debit here, both debit. If you added these two, that will be 100. Sorry, that's 156,000 kina. Then you have to add 88. So 800 here, 100. So 156,800, and deduct this 2,400, you will arrive at 154,400 kina. So only these technicalities you need to be mindful. Sorry, this is one of the important things that you be mindful of in preparing consolidation. Now, the you can also notice that I put some highlights on some figures here. Okay, dividend income. This is usually not given in the additional information, but you have to look into whether there are same dividend income provided by the subsidiary to the parent. So in that case, you have to eliminate that. Another important aspect here, okay, is this retained earnings. This is common issue in retained earnings. Okay, so this particular side. As you notice, encourage trial balance, the retained earnings is 60,000 kina. Okay, so uh, and normally what the things that we are doing is uh, we are eliminating amounts. Okay, basically whatever amount here, for example, in share capital, if we want to eliminate it. Okay, so that's given. Okay, but be mindful that the consolidation amount or the amount that you need to include in the consolidation to eliminate, take note, is the amount during the consolidation period. So in this case, the amount that you need to eliminate here will be for share capital 168,000 kina, general reserves 40,000 kina, and then retained earnings 56,000 kina. And you notice in elimination entries, that's the amount that I put in retained earnings, not 60,000 kina, which is, as you can see here, uh, sorry, 40,000 kina, uh, which of course will be added with income, not this amount, not also this amount, 60,000 kina, okay, but the amount of this 56,000 kina, okay. Then you eliminate, you will have this, right? So am I clear on that? Hopefully I'm clear. And then you deduct dividends, of course, the dividend, depending on the elimination entry. Then you will have the adjusted retained earnings.
you are not adding these two. Okay, you're not adding these two. Instead, you are getting the sum and difference of this, and you will arrive at 154,440 kina. Now, continuing our discussion on retained earnings, as you can see this one, again, you're not supposed to add only this amount, okay? So you start from profit, then add this retained earnings, which we had eliminated 56,000 here, then deduct dividends paid, then you will have this amount. This amount will be carried forward here in calculating the total shareholders' equity. Now, share capital, we have this both companies. We eliminated share capital of uh, the subsidiary reserves, and also we eliminated the revaluation surplus. Okay, so remember when we did that in the consolidation worksheet, you can see here we have revaluation surplus, which are uh, credited here, but in the elimination we debited it. Okay. And then again, you get the sum, you will have this. All right, the other information here are a bit straightforward. As I mentioned to you, if dividend paid here, credit, normal balance, you have debited it, then it will be zero. Accounts payable, if you have 10,000 here, 18,000 here, both credit, nothing here, just add 18,000 here. So it's supposed to be here, not on cash. Okay. All right. So so inventory, you have to add. Okay. All right. Here. Okay. All right. And this one should be moved. Okay. Sorry about that error. Okay, but anyway, you got the point. So add these two. If this one is on credit, inventory is on debit. Okay, our normal balance is on debit. So this 8,000 will be a deduction for both of these amounts. So you have 95,200. Okay. Then you will have this. Okay. You can cross check total equity, liabilities and equity, and then total asset. Then all this amount, you just have to transfer here. Okay. To create statement of comprehensive income, changes in equity, and statement of sorry, this should be statement of financial position. All right, that's the end of my recorded tutorial. Hopefully you've learned something from my presentation. The spreadsheet will be uploaded. You can always download this link. Okay, sorry, this file. I'll provide the link on the description below on my YouTube video. Thank you for having time listening to my recorded tutorial session. Hope you learned something.